This is John Kvale, and this is our April. Woo, it's hard to believe that April has already come and gone. April capital market, financial planning, podcast format, video review, and those of you that are looking, you'll see a picture, a partial picture of our Social Security event, which was a lot of fun, and it's on the header of this post. So I'm going to move on down, and first we're going to go to a quick post that we did right near the end of the month. Those of you that are just in listen-only mode, I'm scrolling down the actual blog post, and I am on a source of funds and entrance into capital markets. I'm going to have to make this a little bit wider. So those of you that are watching, I'm going to make this just a little bit wider, so if at all possible. And basically, the only thing that we wanted to get across here is the fact that different source of funds have different entry points. And probably the easiest one to understand is if you take money out from under your sofa, super safe money, it's built up, and you want to invest it in the capital markets, it might not always be the best time to just toss it all into the markets all at once. There are always different variances, but we just wanted to mention that. We have a saying that, and the opposite of that, we have a saying out of the market, into the market. So funds, while funds may have been rolled over from a 401k and they're in cash right now, but they came out of the capital market, it's pretty easy to just put them right back into the capital markets. Those of you that are watching or listening, I've got a link to the post right here. And so here in this post, we go into greater detail. And now we're going to go to the Social Security picture. Those that are just listening, I've got a neat picture that I did with the GoPro that's taking my video on this right now. But all 20 questions, I've got 20 questions that we got, some of that we were in-house and some that folks had sent us. In one way or another, we've pretty much answered all of these. I had 5 audio machines, 2 cell phones, 2 handheld audio devices, and an old audio device to record Tom Clark. He speaks quickly. It was like taking a sip of water from a fire hose. How much could there be for Social Security? Well, he went over disability, Social Security, and Medicare. Medicare gets so confusing. A, B, C, Medicare Advantage, blah, blah, blah. But we're going to have, I'm scrolling, those of you that are listening, I'm just scrolling down over all 20 of these. We're going to have a detailed review with snips from Mr. Clark's actual voice embedded in our blog post, if all goes well with technology, and then I will write around those. Probably be a 3-month, every Wednesday type of deal. We have probably enough information for a full quarter of once a week. Okay, capital markets, 2 things here. Capital markets, I'm sliding down those of you that are listening, and I'm going to scroll back up here a little bit. Hissy fit. After throwing a hissy fit near the end of 18, everybody's happy again. 2 things. Everybody, a few indexes have gone to new highs, not all of them. And I pulled this one out. This is a Vanguard total. You guys, longtime listeners, probably know that I use this one a lot because this is more representative of a truly allocated portfolio. The S&P 500 has breached new highs again, but it's one of the few. And a good diversified portfolio will have international markets. It'll have other types of indexes in it as well. And this, as this Vanguard total shows, it hasn't quite got back to the new high yet. So, but everybody's happy. One thing that I do want to, I mentioned, those of you that are listening, don't forget, we had an inverted yield curve, which is a great predictor of a pending recession, but only the shadow knows when. We will have one. We just don't know when. I've rambled on a little bit longer because I'm looking at my time, and it's gone a little bit long, but we appreciate all of you that are listening, and we'll talk to you at the end of May. Thank you.